Hello, hello. Welcome, everyone. My name is Kanesha Lenore Jean-Baptiste Brown, and I welcome you all to the Financial Literacy and Wealth Empowerment Virtual Symposium Series, brought to you by the National Alliance for the Advancement of Haitian Professionals. We all know financial literacy is the foundation for economic empowerment, stability, and generational wealth. This multi part symposium series will break down key elements of personal and community finance into actionable, easy to follow sessions. From budgeting and debt reduction to investing, small business finance, and planning for your family's future. Each episode will provide practical strategies and culturally relevant resources tailored to the Haitian diaspora. Tonight's guest, Jude Avril, is a South Florida real estate mortgage lender and the president of Ambassador Financial Services Incorporated. He graduated from Lynn University with a business degree and brings a strong financial foundation to his work. Before entering real estate and mortgage, June spent over a decade in banking, gaining experiences in all aspects of the industry. Tonight, he's known for helping clients navigate real estate, mortgage, insurance, and financial decisions with a knowledgeable and community focused approach. Jude is also the host of a weekly radio show on 980 AM, and that can also be found on 96.1 FM, where he updates the public on real estate, mortgage insurance, and financial topics. In addition, he hosts a monthly in house webinar for realtors and industry professionals, providing education and market insight and guidance to those in the field. We welcome a guru in this field, Jude Avril.
Thank you, thank you, thank you. Nakisha, you've done such an awesome job. I do not think I can do anything like yours. You are awesome. I appreciate it. And as mentioned, today we're going to talk about your credit. Understand the credit, how to establish credit, how to you maintain your credit, and also how to protect your credit. And hopefully I will bring some knowledge that you can definitely use, if not now, hopefully in the near future. Before I start the process, I think Kanesha has done a wonderful job presenting me, but let me just quickly give you a quick overview of my professional background. Again, my name is Jude. I started my career in the banking industry in 1996. From 1996 to 2005, I've worked through a number of banks in the area. Again, I've worked for companies like Bank of America, Regions Bank, PNC Bank, some of the major institutions here in the South Florida area. While I was in banking, I also acquired my mortgage broker license in 2002. And further in 2005, I opened my own mortgage company. Then it used to call Ambassador Mortgage Services, Ambassador Investment Corporation, which I later changed to Ambassador Financial Services. In 2007, I also acquired my real estate license and I started doing both real estate and mortgage. And I've opened my company since, and I've been doing both since 2007 to present. What is a credit score? A credit score is a numerical representation of an individual's credit worthiness, indicating their likelihood of repaying debt. It is calculated based on a factor such as payment history, credit utilization, length of credit history, credit mix, and new credit applications. The most commonly used credit scoring model is the FICO score. This is what most people hear more. FICO, which ranges from 300 to 850, with higher score indicate better credit worthiness. And remember the score from 300 to 850. It doesn't get any lower than that. It doesn't get any higher than that. And the goal is to get it the highest possible. Before we go in deeper, let's go back quickly about the history of credit. Credit started in the early 1800s, and it was primarily to evaluate how to lend money to businesses, not individual. And further down in around 1900s, with the rise of the middle class, that's when they start thinking about how they can use that to also lend individual money. Now, we have to also remember in history around that time how America or Americans were living in America, because it's very important. Because you're going to see changes in the 1970s that will definitely make it a little bit easier. Because before, certain people were not able to get credit. Let's take, for instance, women was not able to get credit. It's not until 1970 when the Fair Credit Reporting Act was passed, then consumers started to get credit a little bit easier. And when you think about it, I think 1970 was a very long time, but it's not that far, it's not that long when you consider that credit was being extended to businesses since the early 1800s. That's over 100 years later when they start looking at women and other minorities, or even I would say black folks, in a way to get credit. It started to get even more popular with companies like Equifax and TransUnion and Experian, because it started to really get popular in the 1990s, around 1988, when FICO score make it a lot easier to compute that data to be able to give credit to others. In 1991, they start using those credit scores to lend money for homes. That's when Fannie and Freddie started to use FICO score to make decisions on credit. Think back, 1995 wasn't that many years ago. Depending on your age, you might think, oh yeah, it's been around for a while. But think, we started to use credit since the 1800s. In 1995, that's when you can say it becomes more popular. So a lot of history has happened between 1800 to 1995. Fast forward. FICO score, like I mentioned earlier, is a group of numbers starting from 300 to 850. Fair Isaac and Company that created the data, that analyzed all that data to compute those numbers, they're the one that has the secret sauce in order to determine what your score is. The key today is to hope to present you information to help you understand what that calculation, what are the ingredients that you'll need to understand so you can get that score to go higher. It's not that difficult, to be honest, but if you don't know it, it may appear as it is a lot more difficult than it is. We have different credit models, but all range anywhere from 3 to 850, as mentioned. And how do we get there? FICO ranges from 300 to 850. Very often, people probably have a 560 or 580 or 620, whatever the score that they may have. They probably think, okay, I have good credit. The fact that you can get a loan with a score of 580, that doesn't mean you have good credit. By definition, if you have a credit between 300 and 579, it is poor credit. Again, I don't make the rules. I'm just telling you what it is. Take a look at this graph, take a screenshot of it so you can at least have an idea what's poor credit, what's fair credit, what's good, very good, and exceptional. Now, from 580 to 699, again, it's fair. Good credit starts from 670 to 739. And this is where you want to be or better. Okay, that's the key thing. When you start getting 670 to 739, then you start looking at good credit, and you can get very good credit from 740 to 799, and from 8 to 850, very few of us have that kind of score. And that's when you really are looking at excellent credit. What are the key 3 strategies that you can start to build credit? First and easiest way is to establish a secured credit card. How do you establish a secured credit card? Basically, you go to your local bank, any financial institution that you bank with. You can ask them, do they offer that product? Because not all of them do offer that product. So when you go there, if they do, basically what it does, they take your money and put it aside as a security blanket so they can extend you that same amount of a line of credit. Typically 2 to 500. Now, I'll tell people, if you have a credit line of 200, be very careful. Even with 500, it is quite low. You will understand further down as we get into the all the different ingredients and how to get the credit score to get higher, why 2 to 500 seems to be a very small number. But again, you're just getting ready to start. Not everyone has access to large money, but typically 2 to 500, that's the way you start. And if you can put more, you can always do more, meaning 1,000 or more. The next way to establish credit is to use a credit builder. And you have a lot of organization around that will give you either a small loan or a small credit card just to start your credit. Typically, those companies, those institutions, they work with first-time credit builders, meaning they know you just turned 18, you're at the age now you can do credit, you can establish credit. They're willing to give you a try. And then once they give you that opportunity, if you manage the credit well, then you will get more credit by establishing bigger line of credit or other bigger size credit. So the third and final way is to add yourself to another person that already has credit. Now, this one, I want you to be very careful because you might think you're doing yourself something good, but you end up doing yourself a disservice. Why? Let's just say I have a credit card that has a $5,000 limit, but I've been late multiple times and I have a high balance. So if I add you to that card, you represent a high risk because that card utilization is a high risk card. I have a high limit, high balance, and I'm late all the time. So that hack is not always the best one if you don't know how to do it well. The best one to do is to get someone with a high credit card limit, very low utilization, meaning very low balance, and never late. So be very careful. Again, the three key strategies to help you build your credit. Number one is to get a secured credit card that you can do on your own, or go to an institution that will allow you to start building credit by offering you either a small line of credit or a small loan. When I say line of credit, I'm talking about revolving line of credit, okay? Which is totally different than an installment loan. Sorry, I had to go back here. So again, the hack of adding your name to the line of credit or somebody's credit card, you have to be very careful how it's done. Typically, it's great for a young kid who has a parent that has excellent credit score. You can put your child name on it. I don't encourage for you to do it for friends and other people because you just don't know what you're getting yourself into. So best thing is if you choose any of these three, that's easy way forward. Now, if somebody were to ask you, hey, can you add me to your credit card? No, go to your bank, find out if you can put $200 or $300 down. They will go ahead and hold that and help you establish credit that way instead. That's probably the best advice I will give you, so you don't have to put your name on somebody else's name onto your account. Now, please take a picture of this. Remember it. This is the secret sauce and how to increase your score. Folks, if you understand this, you got it. Let's dissect it step by step. Now, the biggest portion of your score, which is that represents the 35%. The 35% is payment history. Payment history is how long you've been paying your credit card on time. How long you've been paying your credit card on time, or any other loan for that matter. If you pay on time all the time, that means you have 35% of that 850 score, which is the maximum score that you can get. The next big thing is the 30%. The 30% is how much you owe. Utilization, your balance in your account. How much do you use in that line of credit? Let's just say you have a limit of $1,000. If you use $800 of that, that means you utilize it a little bit too much. Your credit score is going to be lower compared to someone that has the same line of credit that only used $200. Some people say 30%. I even go as far as telling you there's no such thing. Keep it as low as possible. Now, granted, there are times in life you may have to use your credit card a little bit more. I understand. But all I'm trying to do here is to make sure that you understand the more you use it, the lower is the score. I don't care if you have 4, 5, 10 credit cards. Once I add up all their limits, 1,000, 2,000, 5,000, 10,000, when I add them up together, if you overuse them, then you're going to see a lower score. That's why I recommend to people, instead of having 4 or 5 credit cards at $1,000 limit each, I rather have 2 credit cards at $5,000 limit. So this way, I don't have too many to remember to pay, and I don't overuse the line of credit. The 30% rule, I understand people talk about all the time, but I'm telling you, if you want to have great credit, keep it as low as possible. Although I do understand sometimes it may have to be a little bit more. Now, another big factor, which is the 15%, is the length of the credit history. The age. How long do you have this account? 1 year, 2 years, 15 years, 20 years? Because as long as you have that line of credit open, it's going to stay open and that history continue to stay. If I have a credit card 20 years ago, I still maintain that credit card, guess what? That's a 20-year history. That's heavy. You get the whole 15%. Versus somebody who just had a credit card 3 or 4 years ago or 3 or 4 months ago, totally different. So the length of your card. From time to time, I hear people tell you, go ahead and shut down some of your cards, close them out. So which one do you close? I will close the ones that are more recent if I have to. And I will make sure also I close the one that I make sure all my balance and my other cards are lower before I start closing accounts. Think about it. And make sure you follow me closely here. I have to make sure, number one, I get all my balance and my cards as low as possible. Then I can start considering closing account. Because I can have the card and cut it and then use it. So I still have that line of credit available. But if you don't feel that you have that courage to not to use the card, cut it. Or wait till you finish paying all your other cards, or when they are low as possible, then you start closing the ones that are most recent or the one with the lower limits. Make sense? Because you want to get longer history, more consistent payments, and low balance. Those 3 factors, the 35%, the 30%, and the 15%, if you do well in those 3 factors and those 3 categories, you're good. I guarantee you, your credit is going to be high 7 or low 8s. When high 700s to low 800s. If you do those 3 things right. Because the other 2, they're only 10% each. And let's take a look at it. Credit mix. What is a credit mix? We have 2 types of credit. Revolving or installment. What is an installment? Installment is a type of credit that you use and you have a beginning and an end date. Like a mortgage, like a car loan, any installment loan. If I borrow $15,000, I have that many payments for that many years once it's done. Contrary to revolving credit, I can use it, pay it off, use it again. So credit mix, once you have those 2, you definitely have that 10%. And if you have one of the 2, you still got 5% anyways. So that's why I said put more weight on the 35%, which is payment history, and the 30%, which is the amount that you use on your credit in your open line of credits, and also the length you have the accounts open. Because the installment, you have no control over it. If I give you a loan for 5 years, 5 years, it's done, kaput. You can't do nothing after that once you pay it off. So it's not a big deal. For me, that's very small. Again, new credits, believe it or not, count. But am I going to chase new credit so I can get that extra 10%? No. That means I would have to open a new credit card And don't chase that. It's not worth the 10 points is not worth. Because if you do the other things right, you already have a high score. Get it? So please understand this very well. This is the calculation. Whatever the problem you have, if you don't know how to calculate that, how to come up with a solution, that problem is going to linger. But if you understand this little chart here, what it means, how do I get my payment history is paying on time? How do I get amount owed that 30% is keeping my balance as low as possible? The length of the credit history, you pretty much don't have too much control. If you're 18, you just now started to establish credit, there's nothing you can do about it. Versus somebody who's 40, 50, or 60 that start establishing credit 20, 30 years ago, 40, 50 years ago, they have that. They have that over you. It's okay. You still can have high sevens not having 20 years history. Because those two, the amount you owe and paying on time, those priceless. Regardless of the situation. Let's just say life happens. You had to file for bankruptcy. Guess what? You can start the clock over again by, number one, open a secret credit card and keep paying on time from this point forward. And after one thing we don't do much, particularly for someone who's just now learning about credit or establishing credit, is to ask your current bank to increase your limit. Because by increasing your limit, your balance that you have, let's just say if you have a card for 500, you ask to increase it to 1,000 and you owed 200, 200 out of 500 versus 200 out of 1,000. Big difference. That's 20% utilization versus 10% utilization. So sometimes instead of adding a new card, it's best to increase the limit that you have in your existing card. Make sense? So if you can get those things, if you get this chart in your mind, understand it, and you pay on time, you keep your balance as low as possible, and you keep the cards with the longest history, continue to have that long history, guess what? You are clear in your path to a high score. Now, some fun facts. The most recent statistics show approximately 22 to 23% of consumers, meaning people with credits, have a score of 800 to 850. Where do you fall? How do you get to that 22%? I just gave you the codes. I just gave you the formula. Once you understand that formula and know how to execute, guess what? You're on your way to be in that top tier, exceptional, from 800 to 850. And guess what? Not 100% of consumers will fall there. This is reality. We don't have the same capability financially. So it's okay if you fall under the very good between 740 and 799, because 28% of consumers fall under that category here also. It's still a good place to be. And good credit from 670 to 739, between 20 and 21% of consumers fall in that category also. Again, you want to be in the yellow, blue, and green section of this chart because it allows you to get the best rate and save a lot more money. If you fall under 580 and 699, I'm not knocking. At the end of the day, I just showed you how to get there. It's patience. It's just follow the process. If you didn't know, now hopefully you're not under 300 and 579. Guess what, folks? I do not want you to be there. But if you're there, have no worries. All you need to know is how do I get up? You follow those steps, you will get up there. Because life happened. Your brother who's talking to you right now, at one point, I had to file for bankruptcy. Guess what? My credit went down. But I stand firm knowing that I know what I need to do to get myself back up. Between 3 to 6 months, I was in a very good status. You just follow the process. Be patient because it does not happen overnight. Perfect example, length of time since you start establishing credit. You have no control over that. Someone who had to file bankruptcy and start over, it is what it is. All I'm saying, please just understand what you need to do and do what you need to do to get to where you need to get. Now, we talk about how to establish credit, how to improve your score. And folks, if you know how to improve your score, maintaining it is not difficult at that point. All you have to do is pay your bill on time. Because once you pay on time, you're going to be part of that 35%. Keep your credit card balance low. Again, if you're able to do that, don't listen to people that tell you have to at least use 30% of your line of credit. It is not proven. What I know that is proven all the time for me and my clients, the people that I advise, is the fact that the lower the limit, the lower the utilization, the better. You can have a 40, 50,000 line of credit. If your utilization is $1,000 or $2,000, $3,000, great. You and your way to have the 800. Again, I'll keep saying again, be patient. It takes time. Take your time. Pay off any delinquent credit. Now, we can dive in a little deeper into that, but if you have credit that is behind, you definitely need to pay it off, pay them off. Meaning, you do not want to be 30 days late. What I see happen from time to time for lack of understanding is when someone miss a payment on a car or on a mortgage and they realize, okay, the bank is going to penalize me by charging me a late fee of X. Let's assume X is $35. If I pay it on the 15th, I'm going to get charged $35. Same thing if I pay it on the 30th or the next month. It's still the $35. The key difference is, if I use a mortgage as an example, you have from the 1st to the 15th. If you pay on the 16th, you get late. You get charged for a late fee, but that late is not reported in your credit bureau as being late. In front of the bank, you're late. That's why you get penalized. But for the credit bureau, you have to be late beyond 30 days for it to have an impact in your credit score. So if you wait for the next month for you to do the 2 payments at the same time, then you go beyond the 30 days. Do not make that mistake. And sometimes it's just because people don't know. They just think, you know what? I have the money now, so I'm going to wait for next month. I can pay both months together. Not a good idea. If you are late, still pay it, because if it's not beyond 30 days, it's not going to impact your credit score. It only impacts your pocket for the late fee, but not your score. Got it? Now, like I was saying, I said before, instead of having multiple cards, increase your limit so you can have more buying power. If you increase your limit, then your utilization happen to be very low. And know when to close certain accounts, particularly credit cards or revolving accounts. You don't just close them because somebody get you upset. You were late for one day, you got so upset with the bank or why they had to charge you, you went ahead and shut down the account and close it. And that was the account that if you have the highest limit, you have the longest history. No, don't do that. You have to be very strategic in terms of which card do I close and when and how. I explained that earlier. Know when to close accounts. Now, I highly recommend that you get a free copies of your credit report. You can get that yearly, so you can check, see what's in your credit report. And what you're looking for discrepancies, errors. Now, while I don't see errors often, but it does happen. So it's important for you to know what are the line of credits, what are the credits that I have when I check it yearly, so I can make sure everything is reported accordingly. Because one error can cause your credit score to go down, and you do not want that to happen, particularly when it's not your own wrongdoing. Folks, I can tell you how important it is to have the highest and the best scores, but I'm not gonna, it probably wouldn't sink in as much until I start putting numbers into it. Let's take a look together. Two individual, one with the 800 score, the other one with the 620. Okay, 620, and most people mind I have good credit. Yes, 800 know that they have excellent credit, but realistically, with the 620, you have fair credit. Yes, you can get a loan. You can probably buy everything that you need, but at what cost? Let's take a look at this together. Now, the person with the highest score, if you both make the same amount of money, the person with the highest score will be approved for more. Why? Because the interest rate will be lower, therefore give them the ability to borrow more. When compared to the person that has the 620, the lowest score, they'll get approved for less, and they'll pay more in the long run because they have a higher interest rate. Let's take these two examples. The person with 800 will be approved, let's say, assuming that they approve for 350, a higher limit compared to the 250 when you have the 620. And the key factor is because that person can get a 6% interest rate. Their payment is a lot less, which is $16.08 a month. Now, I'm assuming in a 30-year fixed mortgage, okay? Just principal of interest. We're not looking at other stuff, just very basic here, just to make a point. The total interest for the 30 years is $960,000. That's the beauty of being a lender. I digress. Let's leave that alone for now. Compared to the other party, with that score, if assume that they have a higher rate of 6.2, the monthly payment is $1,880 a month, a couple of $100 more, and the total interest paid is $426,000 plus. By comparison, the person with the lowest score paid over $100,000 during those 30 years. What can you do with $100,000 in the next 30 years? That is a huge difference. Retiring financially free or retiring with stress. So the higher the score, the better, because it costs you money. You may not see it. Oh, it's only $200 a month extra. Not a big deal. But in the long run, it costs you hundreds of thousands of dollars. Make sense? Now, common mistakes that people make about credit score. Just play with me here. Closing your credit card will immediately improve your credit score, because some people believe that. But unfortunately, that's not correct. That's why I said you have to strategically understand when and how to close your account, if you have to close. Checking your own credit score will hurt your credit. Again, this is not correct. Often people say checking your credit too many times. Now, let me clear this for a second. Please, I forbid you to go to a dealership to go check your credit. If you have any plans on buying a car, I'm focusing on this particular group of folks or segment or type of lenders. Because one thing that they do, OMG, oh my God, let me tell you, they will pull your credit 8, 9, 10 times. I certainly hope there's a law that comes against that, not allowing a creditor to pull your credit that many times just to offer you a credit. Best thing to do is go to your local credit union or go to your bank or figure out any bank that you want to deal with. You reach out to that bank and then get your pre-approval and go negotiate. Because I can tell you, if you go to that dealership, they will pull your credit 8, 9, 10 times in that one short moment with one click. Because that sends you what? How they do it? They go into the system, it's linked with multiple banks, and the moment they click to do the credit report, it's spread to all these banks. They're all doing inquiry. And that drains your credit. Get your credit check, get your pre-approval before you go to the dealership. This way, you don't have to deal with 20, 10 people pulling your credit. And when you get there, they might still, oh no, we can beat that. Forget it. Be happy with what you have. There's nothing better when you know with confidence, I already have the solution. I don't need your solution. Now, to check your credit for free, you can go to annualcreditreport.com. Follow that instruction in the screen here. Annualcreditreport.com is where you can get your credit pulled for free once a year. You get all 3 bureaus: Equifax, TransUnion, and Experian. You get all 3, and that website, in that website only, you can get all 3 bureaus for free once a year. Now, I know with technology, everybody's getting other ways of checking their credit. Very popular. People say, oh, how about Credit Karma this, credit that? Folks, whatever you get in those sites, they are only a simulation. They give you an idea what your credit may be. Because 9.9 out of 10 times when I pull that credit, whatever in those sites is not what any of those 3 bureaus report. These are the main source to check your credit. TransUnion, again, all of them is by putting transunion.com, equifax.com, experian.com to go online, or you can call these numbers. Now, just as important, when you get to that 800, that high 700, you need to protect that score. The best way to do so is by freezing your account. What does that mean and why? When you log into one of these sites, you freeze your account. They give you the opportunity to freeze your account. That prevents anyone to go ahead and check your credit because the system will block them. And at that point, they will not be able to have access to your credit bureau, to your credit report that you work hard to keep and maintain. Freeze your credit at all time. Because when you're ready to borrow money, you need to do any transaction, all you have to do is just go online and release it, or a phone call, release the credit to allow that company to have access to your credit report. And guess what? You can go there and say, I only want it released for 24 hours, for 3 days, for 5 days. You can schedule exactly how many days you want it to be accessible. So this way you go back and put in a lock on your door and your credit door so nobody else can have access to it. Credit frauds happen mainly 2 ways. First, people who know you. people that lives in the same household with you. This is the most common way of getting fraud, of people fraudulently have access to your credit. Because, hey, we live in the same house. You're bragging about your credit. Even if you don't brag, I know you have good credit because I know you pay all your bills on time. I know you get good interest rate. That person know more about your credit than anyone else. Sometimes you think it's somebody else. Technology is great, don't get me wrong. But at the end of the day, the person in your household is the first place to start looking. Instead of having to look, put a freeze, guess what? They can do nothing with it. The next group of individuals that have access to your credit more is banks, mortgage loan officers, places that you go to pull your credit. I can go to my bank today and pull my credit. Guess what? I know immediately once I leave the bank, or sometime once you're done doing that inquiry, I'll freeze it again. You can have my information. Guess what? You can do nothing with it because I put a freeze on it. Folks, those 3 steps showing you how to build your credit, how to maintain your credit, and how to protect your credit is all I have for you today. I certainly hope this information will help you in making good decisions about your credit.
Thank you so much, Jude. Oh, that was perfect. I'm back here taking notes. It was so informative. And I also feel like you really gave some information that folks don't normally hear, especially about like the history of having a credit card. I'm one of those traditional old school folks that felt like, hey, if I'm not using it anymore, let me just shut it down. And I have seen some of those impacts. So I just first want to thank you for just your brilliance that you're bringing to this environment. So we could jump right into Q&A. And with your role, what is really your role with the Haitian Real Estate Professionals Association? What is your background and connection to that association?
At this point, I'm a member, active member. Honestly, it's the first time we have something of that magnitude. And I was so impressed with Tracy putting, and the rest of the cast putting this together. And I felt that, you know what, I want to be a part of it. And I joined. I continue to encourage my other colleagues and my other friends to join because that's how we make an impact. Once we group ourselves together, and we definitely can support one another a lot better, a lot easier.
Absolutely. I love the idea of really supporting other professionals. Why do you think organizations like the Haitian Real Estate Professionals Associations are important for today's real estate landscape?
Let me tell you, I think the leaders of that group, they say it best. And the reason they started is because when it just started, they didn't have the support. They were looking for help. They didn't know where to go. There's a certain level of experience we're having with our clients. When you go to XYZ Realty and you don't have someone who have experience with that clientele, they may not be able to know how to support you. There's a particular issue that we may be dealing in the community. We know how to solve that problem a lot easier. And now you know you have resources around you that you can tap into. Hey, Jude, have you dealt with this situation before? What did you do? Oh, it is how you do it. This is priceless.
Absolutely. And so I'm also hearing that as you all are a great support to one another, but being a support to one another helps you support those of us that are seeking your services. And so
100%.
that's incredible. And so I want to jump into, because you have a wealth of knowledge and history in this work and doing real estate and credit repair. And so I want to really lean towards our audience members. And so the question I have is that for someone with less than perfect credit, where should they start if they want to become mortgage ready? I know you were talking about that, like that 620 and under. If, someone who's listening to today's conversation, what is like that one thing that we can start really repairing our credit?
It's like an x-ray. I said that's why it's good to check your credit, to know the good, the bad, and the ugly. Once you know it, then you can follow those steps, and that's the best way to start improving it. I don't encourage or refer people to credit repair agencies. Unfortunately, they do have a bad rap. Let's be honest. And on the other side, not too many people understand what to do when they are in that situation. But whenever I have that opportunity to speak to someone and tell them, okay, now I have your credit, here's why you have a bad credit, and let's just do this and do this. Follow up with me in 30 days, follow up with me in 60 days and 90 days. Because if you do the steps, I'll be able to see the improvement.
Mm-hmm.
Behavior. Credit is all about behavior. Now, granted, we know things happen in life. If we lose our job, we can pay our bills on time. We have no
Right.
control over that. If we got sick, or if, just like myself, I had to file for bankruptcy at one point. These are things in life that do happen. But to me, this is not the end of the road. You can always start over. So be honest with yourself. Know how to utilize the money that comes, having a good budget. People can tell me, yes, I don't make enough. It's okay. Now, can we spend less and have a plan and how to make more?
Mm-hmm.
You know what I mean?
Yeah.
So it's about being honest with yourself. It's a big mirror. I just want to put it in front of you, not to criticize you, but let's go ahead and look at it, see what's wrong, and we can work together in terms of making the right move to fix it.
Absolutely. And I love what you said about it really being a mindset. And so I know a lot of times folks, when they're talking about their credit and they're thinking about their next steps, it brings up a lot of anxiety for individuals. And so to your earlier point, like it's not a best practice to go to a quick fix credit repair agency. But what would you say a person should look out for? So someone who's trying to work on their credit, how would they know the difference between this is like a quick fix scheme versus this is actually a professional that can really help me?
I wish I had the solution for that one, to be honest, because a lot of times when people got burned into a quick fix, and at the time they just wanted it so bad, it's unfortunate. It's the reality, and some people, this is how they make their living, and that prey that's out there trying to take advantage of that individual who doesn't know, it's just unfortunate. But to
Mm-hmm.
me, if that person know to reach out to someone in their bank and follow, like I said, either to social media, knowing that, okay, I can reach out to someone from HRAPod that can recommend me to someone in the community that can sit down with me and take the time to analyze and go step by step. I always use my parents as an example a lot of time. If my parents had bad credit, they go to their bank, they sit in front of somebody, and they're trying to tell them what to do. Do you
Yeah.
think they have a clue what to do? No, they don't.
Mm-hmm.
They just need that one individual that says, okay, I'm going to take the time to help you. That's their investment. Somebody invested in my parents. So it's my time to invest in somebody else's parents. And
I
hopefully
love that.
their kids will continue to invest in somebody else. We
Mm-hmm.
have to fix it for ourselves. So to
I
me,
agree.
that's the goal.
That is a wonderful goal. And I think outside of from like the quick fixes, another issue that we have is that we're in the era of AI. And so folks feel like, hey, I could do it myself. And then sometimes we're getting in further trouble. So when should someone seek help from a lender or a financial professional instead of trying to fix it on their own, going on online and throwing it on Google? When do you need help? When is that red light?
The result, when you realize you're not improving, if you're not improving, guess what? It's not working. I wish I could give you a more elaborated answer,
Yeah.
but if the result is not there, guess what? It's not working.
Yes. And then so can you share that time frame that you said earlier? When can somebody expect to see results? Is this like a 60-day, a 90-day window?
I say between 3 to 6 months.
Okay.
Yeah.
Okay. Okay. So that's fair. Okay, that's helpful. And
Now,
so
let me
what
put a
habit?
little, let me allow me to put a little side note. We all don't have the same financial abilities,
Yes.
because depending how deep your situation is, it may take a little longer.
Mm.
So it's unique for each individual. Because if I have one or two things that went wrong, and I can do a secured card and at a higher limit, it's going to be different than someone who does not have that same ability.
Right.
The answer is going to be individual response for each, depending on the situation.
Okay, so that's helpful. And then also just keeping in mind that length of time.
Correct.
So yeah, so okay, that's helpful and it's easy for somebody to begin to implement that. And Jude, you have a wealth of experience. So not only are you helping with credit repair, but then also in the spaces of real estate. And so in
Mhm.
your opinion, what habits should future home buyers develop early to avoid those credit issues? So somebody who's, hey, I'm not looking to purchase a home right now, maybe in the next 5 years, possibly. What are some habits that they should start focusing on now to be strong credit wise?
Okay. I'm a huge fanatic when it's come to credit.
Mhm.
So I always say, you know what, let's improve the score if it's not there. Let's maintain it if it's already there and continue to improve it because we always have room to improve. The credit score is going to allow you to get a lower rate or the best possible rate. If you remember the example that I gave earlier. Now let's maintain that part. Second part, let's stay on the budget because whatever money that comes in, we just have to put a control on how much we can spend and how much we can put aside. They have some down payment assistance program out there, and
Mhm.
unfortunately, the list can be so long you have to wait years before you can
Right.
have access to it. I'd rather you be ready, have enough money to go do it by yourself, and if the down payment assistance comes available to you at that time, great, you take advantage of it. But if it's not, you still can move forward with your plan. So
Mhm.
best thing is to improve your credit, get it as high as possible, save, and buy something that you can afford.
Buy something that you could afford. And so, what are some just you said it was about mindset, some things that we can share around mindset for folks who are like nervous of sharing their financial situations. I know, especially in our community, people are not always so forthcoming of here's all my finances because it's such a personal, it's vulnerable information.
Mhm.
We have to share it. And so,
Indeed.
what are some positive things that you could share with people who might be nervous of really starting this journey because they don't want people to know their business?
I always tell people, don't come to me because you see me on social media and probably think, okay, I'm the best guy. You don't know if I'm a scam artist or not. Sit down,
Mhm.
interview, ask questions, go to the second person, do the same thing, compare. God bless us with the ability of knowing when somebody is doing you good or bad. And
Mhm.
even if you have the hard time of picking the good guy versus the bad guy, who has the experience, who doesn't, at some point you're going to have to make a decision. You have to trust your gut, knowing that, okay, based on the two or three people that I interviewed, when I compare the notes and the answers that they give me, who should I trust this endeavor to? And once you make that decision, be fine with it because you have to give that information. I have to have
Mhm.
your social. I have to have your pay stub. I have to see how much money you make. I need to know how much you have in savings. Okay. And, if you don't trust no one, then we can be paranoid. Let's be honest. Okay. So
Mhm.
at some point, if you interview two or three folks and then you can do a comparison, you draw. You just have to make a decision. That's the way it goes. And when you're not social, find a trusted individual that you can at least have with you to help you make that decision.
Okay, and so let's say some folks are trusting you, everything is working well, and they're able to get that mortgage lending process. What have been some of the biggest mistakes individuals make once they've gotten to the part where they've been like approved and they're searching for home buying and they do something to destroy that? What are those things that you have seen?
Whew, it had gotten a lot better, but I can tell you what sometimes shocks me is when you've done the whole process and you're getting ready to close. Now with technology, as we can get to a loan within 2 to 3 weeks. So while you're waiting for another week or so to close, that person is so excited knowing that, okay, they start shopping. Oh, let me go that nice little set of furniture that I wanted. Let me start preparing for it. Let me put a down payment on it. Or let me establish an account. And the moment that you pull that credit, the technology, let me tell you, is good and bad. Because the moment you pull your credit, I know.
Mm.
I got a trigger say, hey, this person just pulled their credit at such and such store. Now, guess what? I need you to give me proof you did not do new credit. You have to come clean. So the best thing is just hold it. And that's part of, honestly, it's us as professionals, we need to do a better job. Knowing this is a potential issue, we need to train our clients, make sure they're aware not to do these things. But when it happens, that's a deal killer.
Okay, so don't buy nothing until you have the keys.
Just wait. Don't check your credit. I don't care if you just, I was just checking. No, don't do that. Just wait until you have the keys, because the next day you can do whatever you want.
That's helpful. And so I feel like the career path that you're on is very critical, especially in terms of generational wealth, in terms of just like real estate and being able to pass something down. I'm just curious, what sparked your interest in wanting to be in this field of service to others?
I got in it by accident. It's a good accident. It's a long story, please. I can't do this now. And again, my girlfriend then was in banking, and I was more into teaching, and I was pursuing my career, my degree in education. And she was just like, Jude, man, this thing it has your name written all over it. And I went and got a job at the bank, and it just never looked back. I just stayed in banking. I did 10 years, and then got my mortgage license, did mortgage for a few years, and I added the real estate. And I always refer to my parents a lot because I know their capacity intellectually, financially, and how they rely on others to do right. So when that opportunity came up for me to be able to do that for someone, it was just like, it's just so easy for me to do. You know what I mean? Because you just, okay, I gotta treat these folks like it was I have a weakness for hard workers. It just, when I see hardworking folks,
yes,
I bend over backward for that. And I tell people, you don't have to be 100% to come to my office. You get off work, you want to stop by. Oh no, I have to go home and change. What do you mean? I'm not clean. I just get off work. No, come here. You just got off work. You've been doing something good. Okay, just show up. My door is always open. So again, the reason why I do it is because I get satisfaction in helping somebody, number one, getting a home, knowing what it has done to my folks. The equity that my parents have in their home right now, I don't think they could ever save that kind of money. I tell people, you may have a bad time. A lot of time when we refer back to 2008, it's still fresh in our minds. But guess what? My kids have no clue what 2008 was. They were depending on me. But if someone is still fearful because of that, I tell you, it does not happen all the time. So let's build. Because that same person who let the house go in 2009, 10, or 11, now they realize that same home is on the market or probably valued so much more than the price they purchased it for. What did I do that for? I purchased it for 200. At the time I let it go for 100. Now it's worth 500. And I did not let it go because I could not pay for it, because that's what everybody was doing. That's why I love real estate. I believe in it. I'll hold on to it as long as I can. It works for me. I can say, I don't have to convince you. I can just use me as an example.
Yes.
Just, hey, this is what I'm able to do because of. You may not have the same skill level, but I can guide you through.
That's profound. And I love hearing that. And one of the questions I'm having right now that's coming to mind is to your point about that 2008 like market crash. So I know some folks that have great credit, or let's say decent enough credit where they can purchase a home. They have a decent amount of savings plan, but they're like, it's the buyer's market or it's the seller's market or however that looks. And they use that as a determining factor on whether or not that they should buy. So what are your thoughts? I feel like it's kind of like hopscotch. Should there be a time that you wait to jump right in, or if you're ready and it doesn't matter really where the market is?
There's a mentor that I follow all the time. He always say, and when you get that question, people ask you, when is the best time for me to buy? the best time for you to buy was 5 years ago. And the next day, I'm going to give you the same answer. 5 years from now, I'm going to give you the same answer. But when you look back, it's like, but 5 years ago, it was bad. It's, yeah, it's always a good time. Not because I sell real estate, but at the end of the day, one thing we have to have is a place to stay.
Yes.
So the equity that you're losing during those 4 or 5 years that you're waiting, you will never be able to catch up on that. The key thing is to buy something that you can pay for, something that you can afford. Being that I have to have a place to stay and I buy something that I can pay, doesn't matter if the price goes up or go down. Realistic, no, it doesn't. Because if not here, I would have to pay somewhere else anyways.
Yeah.
But the good thing is, I know over time, even if it goes down now or 2 or 3 years from now, it's going to go back up again. All we have to do, just look at historically.
Yes.
To me, again, once I look at a home from the 1980s to now, I'll do it over and over. So when is the bad time? When is a good time? The good time is now. As long you buy what you can afford. If you can afford it, that's a different story. But once you can afford it, go ahead.
Okay, that sounds really great. And so, to the person, this is my wrap up question. To the individual who's like, eek, my credit score is around 500. I got a couple credit cards in debt, and I'm feeling unsure if I can actually do this process. What are some encouraging words, one, that you have for them? And two, can you help that type of client, or do you have a client that, what's your baseline for you to be able to help somebody?
Hope is probably one of the strongest and the best word in the English language, regardless of how you translate it, either in Creole, French, Spanish. I'm sure hope is the best word that exists, knowing that it is possible. So if it's not now and you have a plan, so to me, it's definitely will. So stay hopeful. It probably will require some work, but be dedicated to do the work it takes. So if the credit is not where it needs to be, take your time. It's okay if it's not now. But if you do have a plan and you start doing little steps daily to improve, to accomplish that goal, it will happen. If you believe in miracles, that's how miracles happen. Have a plan and execute daily, then you'll see it happen. You might think, oh my God, just made a miracle. It just happened. Bro, you've been doing the work. It's okay if you believe it's God. I'm not going to get into that. But whatever it takes, keep doing the work. You will see the result. For you who do not have the income or the credit, if you want it, have a plan. Forgive me. Let me go back. I keep referring to my folks. Okay.
Yes, absolutely.
When my dad bought his home, I have his paycheck. I wasn't even in the state yet. He was making $3.75 an hour. So if he can do it, you can too.
Absolutely.
I know it's different time. Don't get me wrong. It's not like I'm insensitive about what the reality of now is. I am. All I'm saying is it is possible. So once you find that right partner to work with, who understands where you are, who wants to invest in you, who wants to accomplish that goal, boy, you're going to believe in this person as if it's God in earth. Or if it's, again, it is what it is here.
Yes.
I don't have a specific person. To me, it's my mission, is what I do. Come as you are. You make millions, come to me. You make hundreds, come to me. We'll sit down and figure it out together. I'm not going to sell you something that is not possible. If it's possible and you're willing to do the work, let's go.
Absolutely. If it's possible, let's go. Oh my goodness. Thank you so much, Jude Avril. This was perfect. I hope that folks are inspired as much as I am and that they are able to reach out to you so we can build this credit so that we can purchase these homes and that we can continue on building generational wealth. And again, folks can listen to you on 980 AM and 96.1 FM. And I just want to again thank you so much for your time. Thank you to our partners at College Cafe. Thank you to tonight's sponsors and partners, Haitian Real Estate Professionals Association, for this incredible conversation. And until next time, I'm Kanesha, Lenore, Jean-Baptiste, with tonight's guest, Jude Avril. Thanks, everyone.
Thank you for your time. I appreciate you.